Hi everyone, it's Evan here from the Trade Risk on Friday, March 24th with a weekend market recap video. We're going to cover all of the major markets, current market environment, and then finish off the video with some individual sector analysis. I hope everybody's doing well. I hope you had a great week trading. Let's get into the action here. S&P 500 actually suffering its biggest drop on the week, on a weekly time frame, year to date. So minus 1.34% drop here in the SPY. Nothing crazy, right? Completely reasonable. That's a normal sort of standard weekly percentage decline, but it is worth pointing out that it is the largest we've seen year to date. And you can see making a little follow through, breaking below support, right? We're trading at now month lows that we haven't seen since February 17th. Again, that's nothing crazy, nothing that should really spook us, but it is worth pointing out that finally getting a little bit of turbulence here in 2017. Now, if we go to the daily chart, we are at the same levels that when we did our midweek update, on Wednesday right here. Notice we're at the same exact price. We've gone sideways, and in almost all of the markets we're going to cover today, we've gone completely sideways since Wednesday. So a lot of the same comments that I kind of made out about markets on Wednesday still do apply, the same levels, but to kind of bring it around, and for those of you who may have missed Wednesday's update, let's just talk about the high-level points here. So support broke at 236 in the SPY ETF. Remember, we did go ex-dividend here, so if you looked at the cash market, you'd look a little more, or a little closer to that support level. We're just kind of hovering underneath it, but we'll stick with the SPY for now. So 236, 235.50, that support level broke, and we failed to get follow through by the sellers beyond the single day drop, right? So Tuesday was the big alarming drop, 1.28% to the downside, and we never really got any follow through traction. We've just gone sideways. So it's given us a little bit of a stalemate here. We're waiting to figure out which way is this pot going to tip. Is it going to go in favor of the sellers? Are we going to get a second leg down? Are we going to get more continuation, some type of capitulative move? Or are we just good for a bounce? Did we shake out the week longs? Is there enough pessimism right here to potentially bounce higher? That's what we're waiting for. That's what we're trying to figure out. And for now, it's still tough to call, and it's just generally a waiting game. I think the levels are pretty clear. You have support up here around 235.50. That's what the bulls, that's what the buyers are going to have to reclaim to regain their footing, to get this panic out of here, to potentially put in a higher low. That's what we want to see happen. And then again, on the sellers, of course, you just want to clear these lows. You want to get back below 233. You want to, well, not back below it. You want to just try and get below 233, get a meaningful close below here, and start to make progress on the downside. A few interesting notes. So we're approximately 2.5% off of the highs right now, off of the year-to-date highs up around 240. We also have some open gaps, 231.50 here in the SPY ETF. So I believe this here is an open gap. I think there's one down here in the 228 area. Small, but perhaps the market may want to beeline for that if we do get that capitulative move lower. So something to think about, not saying we have to go down there, but saying that they are there. The other important point that we talked about in Wednesday's video was the downtrend that is now established here with lower lows, lower highs. It's mild at this point, but again, just goes to show you that sellers now are in control here as we start to make lower lows and lower highs. And you can see the momentum MACD or the 8 and 20 period moving average is starting to curl over and come back down and kind of slam down into price. So it's a spot to lighten up, to have some hedges on. Depending on your time frame and strategy, it's going to be different for everybody, but it's certainly a spot to take notice. A little bit of a pullback here, nothing dramatic yet, but it's a spot at which the bulls and sellers can start to press and make it a more sort of painful experience if we happen to go down that route, if we happen to get that follow through. So that's the way I'm looking at it. That's the way I look at the S&P 500 as far as how we're playing it. We still remain with plenty of sort of long exposure and long names on, but we do have a hedge on, just short the SPY outright, or SPXL. SPXS. I always forget. So we have a position here to just hedge off that long exposure. So this is more of a short-term hedge that we have on. Longer-term positions that we like. Something like, for give you an example, something we bought this week is F5 Network. So FFIV, right, still in a very strong chart. Go to the weekly, right, just breaking out near highs, monthly chart, resolving multi-year range right now. Something like this where this is something that we'd like to have on, try and capture this uptrend, try and stay with strength. But because we are in a vulnerable spot in the general market, we want a hedge on. So things like that, trying to stick with names that are acting well, holding up, and protecting the near-term sort of downside. So with that, let's get into some of the other major markets. IWM here really was sort of the canary as it started to break down before most of the other most of the other major averages. This one, of course, was certainly weak all year, arguably, but this big breakdown happened. We started to get back down to this major support level down here, and now we're seeing some signs of stabilization, which is encouraging. And this is a pretty major battle zone right in here, right around this 134 level. So it's pretty high stakes. Going to be interesting to see how this ends up playing out. Perhaps, as this seems to be, perhaps the leader here in kind of forecasting what's to come. So if we see the IWM continue to stabilize and bounce here, maybe that bodes well for the S&P 500 and holding the current levels that it's at. So pay attention to the IWM 133 to 134. That's going to be a very important zone. And the NASDAQ 100 continues to hang in best of breed, best of the major averages here. But you can see still in a fairly vulnerable state. We did break this accelerated trend higher, this accelerated trend line higher, and you could see potentially bear flagging for another move lower, or maybe we're going to just run right back and reclaim this trend line. So again, a little bit of a wait and see, something to pay attention to, but still holding up pretty well, all things considered. Now, if we get into some of the other major markets, we'll start with TLT, which again hasn't moved really much at all since our last update. So not too much else to say about it. Still kind of on its path higher to the upper end of this consolidation of this range. We're going to see how it acts up here around 122. But for now, short term, buyers are in control. You could use this type of trend line here to perhaps bail out on this if you are currently long, or if you want to try and aggressively get short, then this is something, a trend line, this accelerated trend line that you could use in the near term. If we go to USO next, you can see this is continuing to try and hang in here, right? We've talked about this trend line now at length. We've put out a separate post there on the site. You can go ahead and read that. But you can see there's a long-term multi-month trend line coming in right around here, and you're starting to see price respect it, or at least stall and try and figure out if it's going to, really hold in here for something, just of a short-term bounce or maybe a longer-term bounce. So that's interesting right now. But USO down on the week, but down 2.3% on the week. Sellers in control on the short term, but you do have some price structure there, or at least some trend line support there from a longer time frame. Natural gas, UNG, continues to levitate higher in this channel. Talked about this being, fairly difficult trade so far to really get onto, and I still believe that's the case. Probably why it'll continue to work in this trend, but for now, short term, things are working. There's another trend line right here that you could use, and if that starts to break, you could maybe get an aggressive short signal, or tighten up that risk, get out of your longs if you're involved in natural gas. But it's working for now, both natural gas and TLT for that matter, similar look there. If we get into, let's see, the metals, GLD, you can see coming back to our February highs, getting close up there in a short-term uptrend as well. Looks pretty good. Silver, similar situation. Short-term uptrend is in place, trying to get back towards those February highs. So both GLD and silver making their way back up there. Don't see anything terribly actionable there, but just like this long kind of channel, very slow kind of methodical channel that got dragged out for multiple months, could have a new one starting here. But again, something something to consider. Not that easy to sort of jump in there now and take a piece of it. So I think that's everything. I think we covered all the major markets there. Let's get into some of the sectors. Really, semis and technology continue to lead. I mean, semis broke to new highs today, which is pretty incredible. They didn't hold on to those gains, but they did tag into new all-time highs. And you can see did close near the lows, but still up 0.8% today. So very impressive. XLK, similar situation, clearly not as strong, but holding up on a relative basis compared to many other sectors very, very reasonably. So lots of strength still there. As far as the downside now, as far as some sectors that are starting to roll over, show some weakness. IBB, so biotech had a nice run throughout February, and then they stalled out towards the end of the month coming into March. You can see IBB did break above that nice 300 or get right to that 300, did break above it, and then it seemed to fail there. If we go to the weekly chart, might be a little bit cleaner. You can see poking its head up above the August-October highs or August-September highs of 2016, and then rolling over a bit. So a little bit of a tough spot. Could be a failed breakout if you want to consider it that. Really, you just need to see higher lows. You need to see some price structure develop here, and you need to see the bulls kind of step in. Tough to want to jump in here when we know there's some significant resistance right up here at 295, 300. For me, I would just want to see, these highs or at least that nice 300 level cleared. It's tough to get involved just yet. So, or it just needs simply more time. That's the way I would look at it. XBI, kind of a similar situation, is acting certainly better than IBB. It's been a little bit different on the weekly time frame. You could see a little more of an upward drift there, getting a little more of a retrace back there on the upside. And now you can see if you draw this trend line from the November lows all the way up to recent prices, you can see it's had 4 touches of it now on this accelerated trend line. And if it starts to break below this, that might be your cause for concern. That might be your exit point if you're still in this, or again, an aggressive short entry, depending on how you want to look at it. So keep an eye on this trend line. I think that could be pretty interesting. Once again, it's kind of a wait and see otherwise in biotech in the XBI equal weighted ETF. What else do we have? XLE. I've been talking about this, still is struggling to find its footing. It still just seems to be a slow bleed here. Got this kind of dual trend line, dual support in here from this horizontal level, and then this kind of rising trend line coming up from April of 2016. Still cannot stabilize. Short-term momentum remains lower. I mean, the one thing I'll point out, this has had 7 down sessions in a row. Take a look at this. Not crazy huge downswings, but still 7 days lower. Closing at new highs finally here on Friday. At new lows here on Friday. That is interesting that it's trying to hold in here. And again, 7 days down. Still think there could be some type of snapback here, but it's yet to materialize. So something worth watching, but you got to still be a little cautious there in XLE. IYT, this one just looks sick. It just continues to kind of make new lows here. Broke down below 165. That was certainly the spot that things got a little more dicey. And then finally, financials kind of hanging around in here. We talked about this little mattress of support, prior supply in here between 23 and 24, 23 and 23.75. So there's this trading range that we were in throughout the end of 2016. Looks like it's trying to catch its footing there. So that's at least constructive to try and to move sideways and potentially find some more support at those prior levels. So that I think that'll do it. That seems to be a pretty good cover on everything. I hope you guys have a good weekend. Hope you enjoyed the video. Do subscribe if you do like the videos to our YouTube channel, and hope to talk to you again soon.